Hello traders, Gary Wagner here, just about 1:30 in Honolulu, 6:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. Last trading day of the week, last trading day of the month, and last trading day of the year. Gold and silver finish on a strong note, continuing the rally that began mid-December. Gold breaking above 1300, trading to an intraday high of 1309. We'll talk about that when we pull up our charts, but settling at 1305.10. That's a net gain of $7.90. Silver, also a dynamic move, just shy of $16, closing at $16.98. The dollar did provide some tailwinds for these moves, losing about 0.33%, 91.98. And we did have a softening in U.S. equities as we went into the end of the year. The Dow 24,719 down about 118 points. NASDAQ and S&P all falling in suit. It does seem as though we do have somewhat of a recovery in Bitcoin. Bitcoin trading about $700-800 higher, with the CBOE closing at 14,550 and the CME at 14,470. They have come into alignment, trading much closer together. Traders, an extremely strong finish for the last trading day of 2017, culminating with a market move taking gold pricing well past 1300 on a closing basis, currently trading at 1305.30, net change of about $8.10. The other impressive feature of today's trading activity was the intraday high, which came in at 1309.80, and that is an important number because it matches a previous top, and it's where we were looking for some potential resistance. But the overall characteristics of recent activity in the market ever since prices traded to a low of 1238 mid-December has been that for the last 3 consecutive weeks, we have seen an impressive gain week in, week out in gold pricing. While recent gains in this rally are quite evident when we looked at the weekly candlestick chart, we can really see how this market is moved as we pull up our daily chart. Now, we are long a position from 1265. If you recall from yesterday, we trailed our stops up to just behind the 50% retracement at about 1284. And in fact, one very impressive fact about this most recent rally is that as prices ascended to higher values, technical levels that we could expect to see some sort of resistance proved to be no problem whatsoever for gold pricing 1300, 1310. The reason this particular price point is so important is if we look back to trading activity that occurred back in October, those were the highs achieved before the market began to soften and track back into this narrow and defined trading range between 1265 on the bottom and 1300 on the top. The market would trade within this trading range until it broke below the 200-day moving average beginning of December, and that resulted in the lows achieved mid-December at 1238, which is the start point for the current rally that we are witnessing. Another way to view the most recent price gains is by looking at a Heikin-Ashi chart. And a Heikin-Ashi chart is created a little bit differently because it fixes each daily candle's open from the midpoint of the prior trading day. What this chart style does better than any other chart is graphically illustrate the trend itself and the current strength of that trend by looking at candle size. We can see that as this market came down, we had the body sizes growing in length until we had our pivotal candle, that change in color from red to green. As this rally began, we can see that it was dominated by the lack of lower wicks, which means that on each trading day, the market never traded at or below the midpoint of the prior day. That is a strong statement. The other thing that is quite evident when we look at this chart is there is still some real momentum in this current rally by the expression of candle size that has come in over the last 4 trading days. They are solidly large candles, and that is usually an indication of higher prices to come. At the same time, there is a caveat, and that caveat is the intraday high achieved today, which came in at around 1309. Although we closed respectably higher, up about $8, 1305, solid close above 1300. We have to look at the high achieved today as a potential point of resistance, which takes us to my current recommendation as well as my longer term forecast for the first quarter of 2018. First, maintain your current long position, which is sitting in at 1265. Maintain your current stop level, which is above that, just below 1284. And let's see after the new year if gold prices can exceed that 1310 or if it runs into some sort of resistance, and then we can act accordingly. I am pleased to say that we have the final trade of this calendar year showing some very decent profits. And traders, along with gold, silver has absolutely been moving to the upside, I believe in tandem with recent activity in gold pricing. However, there's been one real key distinction, and that key distinction is where the lows came in as this market sold off mid-December, because what we saw was, unlike gold, we had the 200-day moving average above the 50-day moving average, creating a dead cross right here, and that was just prior to the actual sell-off itself. And most impressively, over the last 3 trading days, we have seen this solid rally in silver take pricing not only through the 50-day, but also through the 200-day moving average. What we want to see longer term in this market is for the 50-day to then cross above the 200-day moving average, which would create the golden cross. Therefore, subscribers that have long silver positions, my recommendation short term is to continue to keep your stop, which we recommended placing just under 1670, and look for potential resistance in the market to come in at around 1730 up to about 1750. And as you know, that has been our target over this last week. Now that, of course, is our short-term analysis. Longer term, and this would take us into the first quarter of 2018, what we simply want to do is to look historically at rallies and the amount of gains witnessed in those rallies. And what we can see is that a dynamic or strong rally will typically move gold pricing anywhere between $160 to $200 higher. This is a $163 rally that occurred end of July up until September. A $100 rally tends to be the size of the move in a more moderate rally. And that being said, given that this market began this rally at 1238, I am looking for the market to move roughly to 1338, 1340, with our tops at around 1363. I believe that that price point is achievable by March of next year, with one major caveat. I do not believe that's going to be a straight up and away move. I think that we'll see legs in the rally or waves. This could be the conclusion or culmination of that first wave, have some sort of a correction, and then we will get that secondary push above 1340. That is my forecast for the first quarter of 2018. And traders, lastly, I do want to take a look at Bitcoin futures. This, the single Bitcoin contract off of the CBOE. There is absolutely no doubt we have seen extreme volatility, extreme price moves in this market, considering that futures began trading a couple of weeks ago at 15,000, then tracked to Bitcoin's all-time high at around 20,500 before falling from grace down to about 11,000, and then the subsequent recovery, which came in almost to 17,000, trading then back to 13,000, and currently trading up about $800 on the day, currently fixed at 14,550. The question is whether or not these recent declines represent a conclusion to the correction as the market came and hit these extreme lows, went to a high that was, of course, below the all-time record high, but recovered above the low that came just prior to that. Given that we're looking at a very, very small data set, I absolutely believe we will see higher pricing in this cryptocurrency next year. The question is, where will this correction conclude, and is it safe to initiate long positions? The second thing that we want to be very, very cognizant of is the fact that these are very young contracts and volume is really small. We'll have to see how that volume accumulates as this market begins to really trade actively at the beginning of next year. Traders, it's really hard to believe that this is the last trading day of 2017. It seems as though it went by rather quick. But what I can say is that gold closed up about 13% on the year, and given the exceptional risk on market sentiment so prevalent in traders' minds, I think that that is a most impressive gain on the year. Of course, we're going to finish the year on a positive note. We've got a strong profit on our current trade, and we also have consistent, nice profits in terms of a yearly gain. I hope to do the same for you next year, but I'm so happy we were able to deliver that for you in 2017. This has been Gary Wagner, wishing you as always good trading. I'm so happy we could deliver that to you on the last trade of the year. We will talk to you next on Tuesday. Bye-bye.